Everybody, happy Friday. This is the morning show. I am Spencer. I've got Steve Strazza with me as well. And today is going to be actually a bit of a Strazza show. No JC. He'll be back on Monday, but we got a lot of guests. Our Fridays are always like chock full, right? We're jammed on Fridays. We have Louis Sykes from AC Crypto. Today we have Jeremy Schwartz from WisdomTree. He's their chief investment officer. I've been trying to get Jeremy on the show for months, so it's a very exciting time. We'll talk to Jeremy about everything and anything. And then we have Alfonso, Chartmaster himself, on at around 9:30, 9:40, give or take. So a lot to get to on the show. It's Crypto Friday. We have earnings. We have failed breakouts. We got lots of things going on. So smash that like button, please. And let's go.
So, JC not on the show today, but maybe forgot that we had a show. I was just on the phone with him. He wishes he could be here for Jeremy, is the truth.
I know. I'm sure he does.
That's a bummer. All right. So it's me and you today, babe. What do you want to talk about?
It's the Strazza show. Oh, man. Well, the doc is full of earnings. And I know you have other things on your mind.
I'm gonna keep it really simple at the top. Like we'll keep state of the markets to a couple minutes here. We have a couple big levels we're gonna point out, the major averages, and then I really want to talk about crypto with Louis.
Me too. Especially after last week when Louis blew my mind last week with the fact that I still can't wrap my head around. And I think it was 5,300 new cryptocurrencies every single day. Was it 53 or 35? 53.
I thought it was like 5,000 something, but yeah. I don't know if we should count them all.
I don't know.
Like, there has to be a level of legitimacy, I think, for some of these new cryptos, if we want to even call them new cryptos at all. If this is something that's getting brewed up in the dorm room and pumped by a couple of college kids in a Discord channel, is it really a new crypto?
Who can say?
I'm never going to hear of it. I don't know.
Say. But Louis will, and then we will, and that's all that matters. So we'll do a quick state of the markets, and then I guess talk crypto.
Yeah, let's do it. So I'm in the 528 to 531 deck. Okay.
We're green?
Yeah. Here's the situation. Throw up the first chart. I just dropped it into slide 2.
That's funny, Brian. Yeah.
This is it for SPX right here. It's clear as day. Tech led, actually, to the downside. So you got this failed break in XLK, but it also happened in SPY yesterday. So what am I showing here? I've zoomed way in. This year's been messy. We had this big sell-off in April that you could see here right in the middle of the chart. Recovered, made new all-time highs. But yesterday, the bears took control. The short-term trend, knocking us out of this little 2-week range I have drawn on the top right of the chart. Now we're back in the box below those pivot highs, below the pivot highs from March and early April even. The S&P 500 you want to see above, call it 5250. No, 5270, 5260. Sure, we'll call it 5260. We're trading around 5235 right now. And we're seeing this in other indexes too. The Dow broke down first. NASDAQ is still holding. So we can more or less make another one of those lists, Spencer, right? Are we above our Q1 highs? And the more indexes that are no longer above those Q1 highs, we want to have a more cautious stance to the broader market. Show the XLK one as well on the next slide. And then I want to just talk about software quick, because yesterday was the worst day for software since the bear market lows in 2022.
Wow, really?
Yeah. So I'm just going to run a quick,
It's not a total surprise, I guess.
no, they got slammed. Do
Yeah.
you want to give a post-mortem on Salesforce?
On the Salesforce, I mean,
So the sympathy selling is what really stood out. So Salesforce sparked it off, right? With whatever nasty report, people hated it. Salesforce got slammed. Really, the worst day in history for Salesforce, outside of 1 month after their IPO. But the rest of the market, or at least software stocks or anything related to Salesforce, also got slammed.
and then you have a name like Zscaler this morning, which is up like 17% on earnings, but it was down yesterday heading into the report, right? But so yeah, by and large, basically every software name was, and every cloud name was down.
So there's going to be winners and losers.
Sure.
And I was talking to one of our clients yesterday about cyber, because cyber was getting rocked yesterday as well.
Mm-hmm.
CrowdStrike got hit pretty hard. Zscaler sold off before they beat earnings. I think CrowdStrike has earnings next week. I think Palo Alto is already behind us. But these were some of the market leaders just late last year, cyber, right?
So I remember because I got long.
Yeah. Oh, yeah. Are you still in the CIBR or the hack?
Yeah.
So here's what we don't want to see. Market leadership, sour. Software, and really cyber is software, right? Cyber is an industry or a subgroup within software. But we don't want to see some of the strongest industry groups or some of the strongest areas of the market start to roll over and die on us right in the middle of the bull cycle, right? That's never a good sign. You can draw, put up this next chart. Sorry, I'm not looking at our screen. Put up this IGV. I should have drawn the arc, but I don't even need to. You could see it on the right-hand side of the chart, up top right here. I could have drawn a nice little arc here, right? Call this potential short-term top. You don't want to see this get blasted and this actually end up being a short-term top. If you look at the one-day rate of change in the lower pane, we were down about 6% yesterday. The worst day before this, you'd have to go back to November of 2022 for. You can see where the chart bottomed. So bull market over? No, it doesn't mean that. But kind of want to see this damage repaired. A lot of things got knocked down below the prior cycle highs that are on our shopping list. ServiceNow stands out as some really ugly price action from yesterday, getting stopped out of that one, right? As my stop alerts start going off more and more, I know it's probably some damage here, right? Maybe look at this group. So that's what's going on with software right now. I think we want to watch it closely here. I don't think we want to give up.
That being said, Steve, software and mega cap notwithstanding, yesterday was a pretty good day.
Again, I think we talked about this on a different show yesterday. I want to make this point again. The broader market is trading with the bond market, right? If I get up here and say breath is good today, 10 years probably down. If I get up here and say, wow, market internal is really weak today, right? A lot of red on my screens. Rates are probably rallying, right? The bond market's weighing on risk assets. And then there's mega caps, which are trading on their own things, right? Mm-hmm. Their own individual issues, their own earnings reports, their own announcements of this. Palantir does a deal with the government, right? They're strong yesterday. The mega caps are doing their own things, and then everything else is really being impacted by interest rates. So the day NVIDIA beat, averages look fine. NVIDIA was up strong. A couple of the other mega cap AI trade was up good, but breadth was terrible because rates were higher. Then yesterday we had the opposite, right? Some big misses, but breadth was great. The rates were down. So that's pretty much the world that we're living in right now, stock market investors. It's important to be aware of. But I think the bigger point is that the big boys are still doing what they want, right? They're still trading on fundamentals or whatever the hell it is. Not so much the bond market. Bond market.
Maybe more headline stuff, or maybe just more basic sentiment type stuff. I don't know.
Earnings. Throw up this MongoDB because this This
Yeah,
goes with this whole theme. So this is a big
it's
off.
getting taken out back this morning, down 24%.
So this is a big cloud software name. I wish we had yesterday's data. We don't have yesterday's data here. We should update this. This one, wait, did this one get hit after hours yesterday?
Yeah, they had earnings out last night, so
Yes. This is getting absolutely blasted. Reading this
light on
top.
the guide, very light on the guide.
Yeah. You saw it with UiPath. I think we talked about yesterday. I think Cloudflare is getting rocked. That's net. Yeah, Cloudflare looked terrible yesterday. A lot of these charts breaking back into their old boxes, right? The old ranges, those reversal patterns that we talked about all last year. Undoing those reversals. If you look at something like Cloudflare. So we got to continue to watch this whole group. I think, Spencer, the big theme here will be winners and losers and continue to be.
Yeah, we talked about it yesterday in retail, but it's really kind of true for everybody, right? So this morning, right? Winners and losers in software, right? Losers, MongoDB, Sentinel-1 down 14%. Dell isn't software, but it's tech, and their expectations were through the roof, and they're down 15%.
Spencer, did you see Dell's pulling right back to those levels that we discussed on CRL yesterday?
Mm-hmm.
I think this is some people will be interested in this.
But then on the other hand, right? On the upside, just sticking with tech software, right? We talked about Zscaler, Asana up 15%, Ambarella, which I forgot about, up 21%, right? So,
wow, jeez, yeah. So Zscaler is kind of grouped with these cyber leaders, oftentimes somewhat different, less mature companies, a lot more sales growth, and a lot lower earnings numbers for now. But the idea is that changes over time, so it does trade at a far higher valuation than peers. The chart has gotten absolutely decimated, right? So this is Zscaler. They tell me it's a cybersecurity leader. It's down 40% from its February highs to just yesterday. I don't know. This could be opportunity for some people. I think Zscaler you want to see back above like 190 though. Train around 182 today. Can we bring Louis on?
No, he's not here. But when he hops in, we'll bring him on.
So the way I understand it,
oh wait, he's here now. I lied.
We all had great fun in Sonoma, and then like half of us got COVID.
Dude, no, that's not a joke. That's actually not a joke.
I know it's not a joke.
I'm telling everyone that you're not joking. For real.
That happened. A lot of people got sick.
That happened. We have to find out how Louis is doing.
You had the COVID too?
Yeah. Wait, you too?
I didn't. I threw out my tests. I don't have.
Yeah. We have it over here.
I got one left. We'll find out today. Louis just told me yesterday. I didn't even think to test myself.
Yeah. Anyway, let's bring Louis on, see how he's feeling.
Good morning, guys.
Louis, how you feeling, man?
I have got COVID.
Hey, me too. Yeah.
I
seemed like a lot of us.
I felt terrible today, so went out, got myself a COVID test, seeing as everyone just got it, and guess what? I'm positive. So I feel like we have a lot of events, and I feel like every event that we have just turns out to be like the super spreader event, and everyone just gets sick.
I remember a few of us, not me, but a few of you guys got sick in January. But so you didn't start feeling sick until what, yesterday? Today?
Yeah, until like yesterday.
That's so weird though, because I felt symptoms on like Saturday, like last Saturday, which is very very interesting. And like I'm already on the upswing. I'm on the back nine now.
I mean, the real victims here are the chat, are the people that are watching now, because the New Zealand accent that I have makes it difficult for you guys to understand, let alone when I'm sick and congested. And so I'll try my hardest to speak as clear as I can today.
Well, we appreciate you. I also want to give Louis a shout out. I asked him to bring with him to America a jar of Vegemite. He delivered as promised. So now I've got some Vegemite in the house. Very excited to share that with people when they come over, if they ever do come over. But let's talk crypto, Louis. Looking at the power rankings you sent out this morning, and not a lot of change at the top, but a lot of change at the bottom. What's jumping out to you here?
What's jumping out to me is what's happening in equity markets, just like what Strazza was saying. You got that failed breakout in technology. And our call that I put out to the crypto members today, I was basically just running through all the sector ETFs and just saying how, at least over the short term, things are a mess right now. Things are range bound. You look at stuff like financials, industrials, materials, energy, technology, they're all just trading in their ranges. And so while you've got the NASDAQ 100, which is still above its March highs, I'm not sure if it's still above this morning. I haven't looked at the action. Across the board, it's really quite messy. And the reason why crypto is a little bit messy over the short term isn't just isolated to what's happening in crypto, it's what's happening in equity markets as well.
I think that's maybe my favorite thing about what you do is you look at the crypto markets, but you don't look at them in a vacuum, right? I mean, all you guys, you look at everything in a market, but you look at crypto not through the lens of equity markets, but almost like next to, and and you let what's happening in equity markets inform your views on what's happening in crypto because they are related. So that's probably one of my favorite things that you do. So shout out to the intermarket analysis because you can't look at this stuff in a vacuum.
Well, I appreciate that. And so it's, do I want to be trading altcoins? Do I want to be looking for as many long setups as possible when technology has just got a failed breakdown or a failed breakout? Probably not. I just want to take it more patiently. And when you start getting that uptrend reassert itself over the short term in equity markets, then, yep, sure, Bitcoin is probably going to be breaking out in the next wee while. But until then, I think just being a little bit patient over the short term, and potentially throughout June and maybe July, we could be anticipating a little bit more chop here in Bitcoin before getting an ultimate range resolution to the upside.
And speaking of that upside, we were talking yesterday. Is I know it's, I know we're ways off probably, but is Bitcoin at 100K? Is that like the biggest level of anything in the history of levels?
Well, it's interesting because a lot of people talk about Bitcoin at 100K, just like they throw it out as this arbitrary number because it sounds cool. It's six figures, but in actuality, it actually lines up with a key Fibonacci extension. And so, while everyone's talking about 100K as some mysterious psychological level, which chances are it is going to be a psychological level. We see this in markets all the time when a stock is hitting, $100, $1,000, or hitting some clean arbitrary level for the first time, there tends to be some trader psychology around how people act around that level. But in the case of Bitcoin, it actually lines up with the 161.8% Fibonacci extension of the entire 2022 bear market. And so I think if we do get that breakout above 73,000 in Bitcoin, I think you can buy it long with a target up near 100K. I think that's where we're going eventually.
All right, so short-term mess at the chop, mess at the top, chop at the top, but underneath the surface, Louis, things are looking better.
Things are looking better. You're getting some breakouts. Strazza has just been hitting out my DMs. Hey, what do you think about this Jasmy coin? I think he was talking about it on the morning show. But yeah, so you are certainly getting.
To be clear, not asking you what you think about it. I know what you think about a chart like this. I'm asking you if there's others like it. That was the question, right? What else looks like Jasmy is what I'm asking myself.
You've got Ondo Finance where you had that breakout. And I've been talking about that to our members.
Is that, what's that one? What is the
ONDO?
Ondo.
So this one has to do with the tokenization of real world assets, which is a big theme right now in crypto.
Love that.
And so it does have a lot of backing from big players like BlackRock, more of the institutional side, where you can get that tokenization and essentially converting real world assets into 24/7 traded vehicles, which
So
I think
explain
over the long term.
explain what this means. If you have a
What,
famous
what
rock
assets?
and roll record or some sort of baseball that Ken Griffey Jr. hit in the 90s and signed, right? Sports collectibles, this works for. Stuff that needs to be stored and kept in certain places, right? Even after you buy it, they're tokenizing these sorts of assets. And these are the cryptos that are allowing or helping do that. Is that right?
Well,
This
yeah,
is,
and also thinking about it wider than that as well. Thinking about just traditional bonds or equities,
they're going to
just
do it for stocks.
just converting those into tokens. And you might be going, hey, why the hell do you need to convert something in like a traditional asset into a token? Because
Yeah,
you can trade it 24/7, and so it's
I'll
all
tell
about
you.
enhanced liquidity.
For auditors too, if you've ever done an inventory count at the Depository Trust Corporation, the DTC, which holds custody and holds all stock certificates, that's why we need this. We used to go there for days at a time, just counting pieces of paper.
That sounds
People
fun.
do
Really, that's actually really interesting. I never thought about it through that lens.
people do that still today. They go and count stock
Mm.
certificates at a building, a real
I mean,
place.
I guess it's no different to the wider theme of, if you're, doing accounting on chain is so much easier just because it's all tracking
Absolutely.
incredibly
Louis,
transparently.
do you remember when I went to a couple of those conferences in 2021, 22? This was a huge theme. I came back talking about this. Like I was excited about this one. I thought it went away. I haven't heard much about it. So this is awesome. You have a custom
Yeah, it's
these guys?
I don't, but another tokenization coin that's done really well is Pendle. Ticker symbol PENDL. Wait, sorry, PENDLE. Very long ticker. Pendle.
That's an OTC crypto.
Too many
Yeah.
letters.
But yeah, it's really just a big theme in crypto over the long term. But again, these narratives, these stories, they're really fun to talk about, right? Like we definitely recognize them, but we're not making trading decisions solely based on these narratives. And so that's an important distinction that I want to get across in case you might be, watching and going, hey, well, I don't really believe in that. That I think, this narrative is going to go another way. These are conversations more that we just have for fun, but we let price action, we let market trends dictate our execution, not these stories.
That's a really good point. It's fun to talk about this stuff, and it's fun to talk about narratives, but narratives are not making the decision for you. I guess they can, but they probably shouldn't, right?
Mm-hmm.
Really good point. We probably don't mention that enough. There's a difference between talking about something and then actually having the reasoning to do something, right? And you guys let the chart tell you what to do. You don't let the narrative say what to do. But nonetheless, narratives are fun to talk about. So here we are. So
Exactly.
what other narratives you got for us that are fun that we can talk about?
Well, I'm sorry, I'm not really a huge amount of fun right now because, crypto markets are just a little bit boring. And so, you might say that I'm boring, like, what's the cool narrative? What's the stuff that all the cool kids are talking about? But in actuality, there's just not a whole lot going on from a trend perspective.
I mean,
Um,
we have an Ethereum ETF or 4 or 5 coming eventually one of these months.
I mean that is certainly interesting. I'm watching the ETH BTC ratio there, and so we got that massive spike in Ethereum following that news. So it's do I want to be buying and completely overweighting ETH now? I think chances are you're going to get a little bit of a pullback in that ETH BTC ratio as it mean reverts following this move. But I think that's a really helpful trend reversal and that longer term downtrend that we've seen in ETH relative to Bitcoin. And now that we've got that move, I think it'll be really interesting to see how the market responds following that new information.
I wish I could remember when the Bitcoin ETF stuff really picked up steam. I guess was it what, like a year ago? Maybe I don't
Mm.
even know, but you could just look at that and just extrapolate what Bitcoin did in that window of time as an example for what ETH could do in this window of time. Just a thought.
Yeah, exactly. And it's really interesting, when you first got that Bitcoin announcement, it was actually ETH that outperformed Bitcoin in the initial stages as the market realized, okay, yep, now that we've got the Bitcoin ETF, chances are we're going to get that flow through into ETH. And Now I'm wondering whether we get that flow through into stuff like Solana,
Mm.
whether the market, begins pricing that in now that we've got that ETH news.
Yeah, that's a good thought. Louis, I mentioned on the top of the show that you blew my mind last week in your presentation, which, by the way, was my favorite presentation of the week. I told you that.
Thank you. That means a
You
lot.
told us that there are over 5,000 new cryptocurrencies created every single day. Is that actually true?
I mean, these are cryptocurrencies that anyone can make.
Okay.
It's never been easier to make one. So all of these are going to zero. We all know that. But it's still an incredible statistic, right? It's not 5,000 cryptocurrencies in existence. It's 5,000 that are launched every single day on average throughout 2024. That's insane.
And yeah, 99% are going to end up being worthless, but it's still
Zero.
a remarkable statistic, right?
0.0.
Yeah, that's right. But that blew everyone's mind. Like the room gasped when you said that.
Yeah, I definitely noticed that.
Yeah, that was pretty wild. Hey, since we have you, what was your favorite part from last week?
Really just, I mean, it's going to be a boring answer, but it's just getting everyone together. It's not often that we're together in one room. And so just being able to pick each other's brains, just mingling, bumping shoulders with an incredible group of people. You come from you leave these events with your perspective widened, with your eyes opened, and seeing a lot of thoughts and ideas from completely different lenses and perspectives that you otherwise wouldn't have approached. And so it really, helped open my eyes to a lot of things that I wasn't seeing beforehand. And so it's just the conversations that you have are just immensely valuable.
Yep. So our next event will be in Chicago in September 18th to the 20th. We'll be at we'll be right downtown there. If you want to come hang out with us, you can. You can scan the QR code that's on the screen and come hang out. We will be there. JC, Steve, the whole gang that was just together, and we won't have COVID.
Fingers crossed.
Fingers crossed. But we won't have COVID. But yeah, that was a nice little cherry on top yesterday, finding that out. But yeah, I agree with you. Great event, great to see everyone. But what was your favorite? So that's like the cliche answer. Give us like the non-cliche answer. What was your real favorite part besides seeing everyone?
I know that's the cliche answer, but the event itself, the location, it was really nice. Sonoma, California. It doesn't really get much better than that. Just really relaxed, just chill. Completely different vibe to New York.
I told everybody that your favorite part was the spa.
Okay, if we're being honest, yes. Okay, that probably was my favorite.
That's how hard was that?
I need to remain professional here,
No, you don't. It's fine.
The analyst team had fun. We did a spa day. Some of us did a golf day. We did a vineyard day. A lot of team building. So
fantastic event all around.
it was good.
Can't wait.
You're a superstar, Louis. Feel better.
Appreciate it, brother.
See you, Luke.
Yeah.
All right. Another one bites the dust. So that's like 6 now that have the Rona. 6 out of 30 that were there. So
oh man.
Anyway.
Oh well. Listen.
Hope it feels better.
I'm on the other side of the hill right now.
Me too.
I'm on the rebound.
Oh yeah. I've been on the rebound for a few days.
We might get out there. I don't know.
Oh yeah.
We don't know.
Well, it is
probably not.
It's a Friday, so
always tomorrow. Get Jeremy on. I want to talk about some of these funds. I want to talk about this AI conference they were just doing.
All right, we got Jeremy Schwartz in the house, CIO to WisdomTree. Finally,
Sean's funny.
We were supposed to have him on like a month ago, but then we didn't do a show that day because half of us weren't here. So we got him on now. Here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Jeremy.
Steve, Spencer, what's up?
Hey,
Good to see you guys.
what are we doing today?
I think the last time we saw Jeremy, was that in California
I
last
think
year?
it was at one of the at the Future Proof conference.
You going this year?
I have been enjoying going. I hope to be there. Hopefully, we've done our Behind the Markets podcast there last few years. Hopefully, we can do that again. But it's been fun.
You got to go to.
And JC did it with us last year. That was
Yes.
that
It was great. Yeah, you guys were on at like 8 a.m. You had a full audience. You got to go to. Got to talk to your people at WisdomTree. Go to that ETF exchange conference in Miami. Have you ever been there?
You know, we started sponsoring less conferences formally, but we sort of go and hang out. But yes, we have.
That's a good one. That's
I
a
grew
good
up
one.
in Miami, so we like to go down there.
Did you? So did you and JC like hang out as kids?
I didn't know JC back then, but you know, we're now also both here in Pennsylvania, right? Like I've gone from Miami Heat to Sixers and Eagles, and you know, so I've become a real local. But
Did you converted your sports loyalties?
when you have two young kids growing up, that I've been here 25 years now, so unfortunately, well past the halfway point. So I've become a Philly person, but
You can't take them to a Heat game.
We did. We went to the Heat Sixers for Christmas last year. So that was awesome. But we rooted for the Sixers.
I try to, when I get really depressed and miss sports too much, we'll take trips up to Miami and we'll get involved, go to a Hurricanes game or a Heat game.
Nice.
So I want to talk about this Wharton AI conference. Were you there?
Very academic. So it was and actually Wharton just announced a new AI analytics program. We had Daniel Rock, who's one of the, I'd say, leaders of AI research. He's been on our podcast a few times. And so he was the host of one of the co-hosts of the conference.
And you just had him on the pod this week, right?
We just did Dan on the pod, and it was a little geeky. It was in the weeds for people focused on the academic papers and the outreach. But it's obviously the only thing people are talking about in markets. It's like not the Mag 7, it's the Mag 1 with the video holding everything up. Yeah. But I'm trying to figure out. We talk a lot on with Professor Siegel. We talk a lot about macro and what is the Fed neutral rate going to be? You're hearing a lot about, hey, when's the first cut going to come? We're actually more interested in the long time. Like, what is the long rate the long run Fed funds rate going to be? And sort of productivity and the impact on growth is like a key question. So I attended like all the macro sessions there. They have sort of like 2 tracks, and macro was a big part of it, and trying to understand what are these people saying for the latest trends in the research. Because our view is that productivity, which had been like the last decade, it was very disappointing. The long term, you go back way back, it's like 2%. Then you had like 1% productivity, which leads to lower real interest rates.
Right. And
our view is it's going to be higher, and we do believe in the productivity story that AI is going to support, but it's very, very early days. So I'm trying to stay in touch with the academic research on that.
So what you're saying is AI sparks some sort of productivity boom. So we enter an environment where we have higher growth, and that would dictate higher interest rates for the long-term neutral rate, right?
Yes. I mean, when you think about what is economic growth, it's a combination of how many people are working, how productive are those people, right. And there's going to be people who, there's going to be some jobs replaced from AI, and there's this whole question of the winners and losers from it. Is it going to help the sort of higher end jobs, higher wage jobs, or the lower wage jobs? Who's it going to help? Is it going to lead to more inequality, less inequality? Because some of the research that they showcase talks about how the high end doesn't improve the most. They do the training on the best workers, and the low end's able to catch up, and so it's sort of a leveling effect. And so there's some of that, but then there's also the inequality where people who have assets are going to invest in capital, and they're going to be the investors in the companies that benefit, and that will spur different inequality elements. But
the more I think about it too, like with most jobs, I'll think that way. Like garbage trucks were just here. Robots can't do that.
No,
there's certain jobs that I don't see it. And then when you get to more professional service type jobs, it's like I'm sure that there's going to be a ton of AI tools being used at law firm, but you still need lawyers, right? They're all kind of like their own situation. And I think some industries are going to get disrupted in a big way, and others might look back and say, nah, not much really changed.
Everybody's got to experiment, though. Everybody has to figure out, how do you do your job better, differently. One of the professors at Wharton is Ethan Mollick, and he's not like a tech person, but he was like a management professor, and he pushed himself, and he's now got one of the most popular books called Co-Intelligence on the subject, and even he used it to help write the book. But he's embodied just trialing it out and saying, how much can I get done in 30 minutes? And the amount that he's been able to accomplish in just 30 minutes over the last few years keep getting better and better. And so, it is on us. And there was a lot of interesting research about you tell people that AI can do their job better, or it can help you with your job, and still people don't do it. It's sort of this interesting friction point of there's either this fear, or they say it's lack of training, which Warren says, hey, we could do something about the training. And but it's an interesting dynamic of.
I think it's time too. Like, on our analyst team, we know that we're doing things now that we could do better, but it's like our day is full. You got to add an hour in to research the AI and figure out how it can help you. We try to have a meeting once a week where we're basically looking at processes and saying, how can we use AI to do this faster or better, or do it in less time?
You got to get more interns. I mean, there's this whole thing about the interns, and I'll tell you, I've had a few Wharton interns here in the backyard, and they actually, because it's so innate to them, they don't know anything different. So the fresh views, fresh out of school, I think is actually the way to go if you want to do that.
If you know anybody who's a senior at Wharton who's interested in the charts, please send them my way.
Okay,
send them my way. We're looking for a college kid, actually, because our most recent intern is joining the team full time now. But you're absolutely right. And the interns too, they're fresh out of college. They know how to use they're playing with the tools far more than us old guys. So they're kind of like more tuned in to what's going on here. Yes. Listen, let's enough AI. We're market people. You and Mr. Siegel do such a nice job just covering macro. Are you an economist, Jeremy? Would you consider yourself an economist or no?
I was my degree just was an undergrad degree at Penn, so I was one of his Wharton students. But I'd say I've learned all of it from him, and it's you like learn on the job. Like once I started working for him like 23 years ago, interestingly, he wasn't a finance person. And he's known for stocks for the long run, and he never took a single finance class, but he was trained in his PhD at MIT was monetary economics. So he's trained to be Powell. Like he is trained to be the Fed person. So now his approach isn't the rigorous like regression, econometrics modeling. It's sort of a big picture view of the world. And we did a lot of that on inflation and what's going on now to try to simplify what's going on with some big picture insights. But
how do you guys think Powell has done?
Oh, that's an easy one where we've given him the worst grades you possibly can get. Now, a lot of people saying he's landing the plane and he should get a lot of accolades for landing the plane. And I'd say now we're the least upset. He's gotten to the place where, you can understand where they are today. But in 21, we were saying there's going to be a lot. The big mistake, there's been two big mistakes. The first was saying the money supply has no relation to inflation. And every time people ask them about that, they still say there's no relationship between money supply and inflation. And they look at this little minutia of changes. But when you have 40% explosion in money in 2 years, it's like, hey, yes, there's going to be inflation. And that's what Milton Friedman, Nobel Prize in Economics, who's Siegel's mentor, taught him about that.
That's not really a concept that gets argued in business school. That's like a foundation.
And but there was not a single dissent from the Fed saying, hey, maybe there's going to be some inflation. And so we were pounding them in 21. Now, interestingly, that's not growing. There's a magic number of 5% that you want money supply growing, 2 to 3% real growth, 2 to 3% inflation gives you 5% money supply growth. It's not really doing that now. And it was contracting last year. Some parts of it are growing, like the money market mutual funds. Some of the bank deposits stopped declining, but it's not really growing 5%, which is one of the signs of, hey, maybe the Fed is a little too tight. There's a whole question, are they too restrictive or not?
Yeah.
And, then we also talk about using very stale data. We have our own version of Shelter that's more real time. And this is using some different market indexes. And I would say, hey, inflation's actually below 2% now, not the threes that you hear about, and how much Shelter is driving just the official CPI. So that's the other two big insights that we have.
So you guys see inflation coming down actually right now, currently a lot more than is being reflected in the PC and the CPI?
Well, yes, if you use the official Shelter is like 5.5, and that's this owner's equivalent rent concept. And
wait, you were saying it's a 5.5% weight in the CPI number?
No, the actual trailing 12-month inflation
5.5%
is 5.5%, and that's 40%. That number, 5.5%, is 40% of the calculation for core CPI. So if you put in something like apartment list, which is negative, apartment list is a negative trailing 12 months. But we do, you can do some averages, and our number with an average of apartment list and something like Zillow gets you something to like below 2% on core and headline CPI.
So what makes them cut then? Because they're not looking at your number. And
well, there's really a little bit of conversation on it, but you're right that it's hard to just pivot from, hey, we're saying we've got these pressures, and now saying, oh, it's actually fine. It's a continued, as he talks about, a continued confidence that it's coming down. And now the question is, when does unemployment tick up? You haven't really. This is why you understand why they're where they are. Right. Is unemployment hasn't ticked up. You're not seeing any negative jobs reports. Payrolls is still doing fine, and so why they're not cutting. And it's going to take that unemployment 4.1, 4.2. You get a few negative jobs prints, But that was our worry coming into the year. When the market started getting 6 to 7 cuts, we were like, hey, no, if they don't cut, it's because the economy's fine. Don't worry about the 6 to 7 cuts.
Right.
But there was a worry that they'd be stubborn, just like they were when they said there was no inflation. We were they're going to be equally stubborn, saying there's too much inflation. If the economy weakened, they're going to put you into a real recession.
Right. And
they're not. They sort of showed flexibility. If we start getting that unemployment, they will start cutting.
How much do you think they're paying attention to financial markets? Like just the fact that the stock market is so fine, you think that weighs into their decisions at all?
Actually, when you hear them talk about it's actually restrictive, people would say, hey, the financial conditions are very loose because markets are at all-time highs.
Right.
But they actually say no, it's restrictive because, just look at the cost of a mortgage at 8%, or close to 8%. It's not. I think they recognize that it is restrictive, and that financial conditions, the market's going to do what the market's going to do, and there is some wealth effect factor there, and they do pay attention to some of that, but it's more they're looking at the cost of borrowing and saying it is restrictive.
All right.
NFTs are the speculative. You could say, hey, with all what's going on in what your previous conversation, maybe they'd say, hey, there's a speculative frenzy. They're not tight enough. You got to hike. No, that's not what they're talking about. No.
You don't think they're looking at Dogecoin or Pepe the Frog?
Or the meme stocks? No, I don't.
Things are getting frothy out here. All right. I think the biggest question right now for market people is, where do rates go? And I think coming into the year, it was consensus, and positioning was definitely offsides. Like I said, 6-7 rate cuts.
Yeah.
We're talking about maybe the next move is a hike. I think that's kind of crazy, but we're just kind of stuck, and it can go either way. If you're a technician, you're looking at the chart and you're saying rates are going higher.
Well, here's an interesting point. This is one of the stuff I love what you and JC put out the charts on this. You guys do, I think the two of us are really the only ones who talk about this, frankly. Like, I don't see anyone else talking about this.
What chart?
Which is, you guys track CEW, which is our EM currency fund, as one of the sentiment gauges for the markets. But I also talk about the dollar. We have a strong dollar fund, USDU. It's the exact opposite of
CEW.
Basically, CEW is a basket of 14, 15 EM currencies. USDU is more, it's got developed like the euro, yen, pound, as well as some of the things like China, Korea. But USDU is like the exact opposite. If you pull the chart of USDU versus the ag, the bond and they're basically the exact opposite chart for the last 3 years. USDU is going higher, bonds are going lower. And, you know, if you go back for the traditional 60-40 portfolio, bonds, you know, were the ideal hedge for stocks for so long. Risk off, bonds do well, stocks get crushed. You have a recession, financial crisis, terrorist attack, whatever. Bonds are a good hedge. Inflation, bonds are not a good hedge. And, you know, our view might be that inflation is coming down, but if you're buying a 30-year bond, it's not just this year inflation, it's your inflation in the next 30 years. And you got people like Bianco and others who are, inflation is going to be higher for longer. We got this higher risk. And so I think people don't have enough long dollar risk in their portfolios. Like they're too exposed to a weak dollar. Apple is exposed to a weak dollar. Coke, all these tech companies, the S&P is exposed to a weak dollar. And you guys show that chart all the time. It's like, well, I can't, if the dollar's going up, that's a headwind for the S&P. And I don't think people appreciate that enough.
So USDU could be a vehicle for that.
USDU is a great hedge. I think it's a good, you could use that in part of fixed income. Even Bianco, you know, Bianco started managing a fixed income ETF. He started adding that to his fixed income ETF.
Yeah.
I talk about it actually from a currency hedged in equities standpoint. You know, I've been doing this for 15 years. We started our first currency hedge ETF in 2009.
Yeah.
But you know, that if you have an unhedged international IFA or Japan or Europe, adding the hedge is one other way to add long dollar risk.
Yeah.
Compared to the unhedged. Now, interestingly, when I first started talking about hedging, I would say, hey, you're neutral. When I do DXJ, our flagship Japan, it's basically, I say neutral. And this is like the classic Buffett trade now. He's been buying Japanese stocks. He's been issuing yen bonds, so he doesn't have any currency risk. I think he's going to buy more Japan very soon because he's been issuing more yen bonds. But I say, hey, you have no yen risk. And if you just pull the chart of DXJ versus EWJ for the last 5 years, it's unbelievable. You know, EWJ has done nothing versus the broad market, and DXJ is considerably ahead.
And if you're wondering why they're so different, just look at a chart of yen. So DXJ allows you to own Japanese equities without any exposure to the Japanese yen. Look at this thing. This chart, you don't find charts like this. Are these like AI stocks, Jeremy?
I've been saying it was like an AI stock last year. I said, now, interesting, they do have some good semiconductor companies there. But here's what this will surprise a lot of people. A lot of people, U.S. investors, have a lot of S&P 500. They have a home country bias. I know we're the only country that matters. 80%, 90% of what people have is the S&P 500. I have a view. I think DXJ can do better than the S&P, call it the next 7 years. And, you know, I'll give you my, now it's been up a lot. So you say, how you're still chasing it. We missed the party. I'm not so sure. I mean, the S&P has a 21 PE. That's a 5% earnings yield. You know, we often say you take 2 to 3% inflation, add on top of the 5% earnings yield, that gives you a 7% nominal return for the S&P.
Yeah.
In DXJ, I'm starting out with 5%. Why am I starting out with 5%? I start out with 5 because that's the carry. You know, our central bank's at over 5 3/8. They're at 0. We get paid 5% for not doing anything.
Yep.
That's just by hedging the currency, you're getting this 5% carry. Then their stocks have doubled the dividend yield. They're over 2.5%. They've been growing the dividend like 20% because of all their corporate governance things that's happening there. They're at 13 to 14 P, even though they've ballooned in. You saw that chart. It was straight up, but they're still a 13 PE versus 21 for the S&P. So
the Nikkei?
My basket, DXJ's basket.
Wow.
We show that on our website, you know, every day. You can pull up the P ratio. It's 13.3. And it's
Is that just the case with ex-US in general, or is Japan extra cheap?
Well, ex-US is pretty cheap. Ex-US tends to be, they don't have the tech, you know, when you think about the S&P at 21, it's because 40% of it has a 30, you know, 40% is tech, or the sort of what I call expanded tech that has Amazon and Meta and all that. That's like 30, and that's 40% of the S&P. You don't get those big tech stocks. So it's definitely, if you look at the ex-tech S&P, it's much closer. That's like 17 times, 18 times. But international, you have a lot more banks, a lot more energy, a lot less tech. And so that just the sector shift alone explains some valuations. But DXJ does have a dividend orientation in the weighting, so it does have even more of a value tilt than just the market. That's part of when WisdomTree started 20 years ago. That was, how we started.
There's a lot of tech in Japan, right? It's not like Europe where some of these countries have literally zero tech stocks. It's crazy. There is tech in Japan, but these companies, whether it's Sony or Nintendo, they kind of remind me of like our legacy tech names in the US, which tend to trade for far lower multiples, right? The older tech, the hardware kind of tech.
They've got some robotics. They were leaders in robotics, things like Fanuc. They do have Tokyo Electron. They're building the Taiwan Semi is going to build some plants in Japan.
Throw up this Nikkei chart. I think this is the story. Like you're saying, Japan can outperform for years. This is just happening. This is a monster base, 30-year base, 40-year base, almost like the biggest base we can find. It is just now resolving higher to new all-time highs. And I think I have this marked up because somebody told me there was a recession in Japan, like I think in the fourth quarter or something. And the stock market's ripping. So
right. And people say, how can you be bullish on a country that has a declining population? And that's another thing. It's like, well, you're not buying Japan's economy. You're buying a sort of cheap way of playing global growth. So it's not about the local economy to me. It's about being cheap stocks, getting the 5% carry, reasonable multiples, better corporate governance, doing more dividends and buybacks. So all very positive there.
And I think Asia in general is kind of perking up right now, particularly like Southeast Asia, less developed Asia, Malaysia, Philippines. They're starting to work here and there, not all of them. China, all of a sudden people are talking about China again. India's been working.
Yeah, we've seen at WisdomTree the flows come to DXJ. EPIs, our India ETF, that's taken in last year. It took in about $1 billion. Year to date, has taken in about $1 billion. So we're seeing a lot of money come out of China into India and Japan. I think both of those are strategically benefiting from the shift from China. I do think, we wrote a long paper on India, and we quoted Gudlock, who's not the most big macro bull, in the world, but he talks about you should buy India for your grandkids' college fund. And actually, I think there's something to the sort of tax deferred college fund, because it's not going to be as tax efficient as a US. You can't do create redeem just like that. Okay. But I do think, hey, this is going to be one of the world's best growth stories over the next 30 years. They're going to bring all these people from, so you call it agriculture, and bring them to the cities, and there's going to be this huge catch up, a lot of infrastructure. They've been, in the short term, they've had a very pro-business government with Modi. He's going to come back in power, and they're going to do a lot more reforms. And so it's got the best population in the world with the best income growth catching up, an ally. They're playing the U.S., Russia well. They're buying cheap Russian oil, but they're our ally. So it's an interesting dynamic of what's going.
I love this story. Everyone is so bullish India, but it concerns me, and I'll explain why. Earlier on in my career, it was the same story, but it was China. It was buy China for the next 20 or 30 years. It was the demographics were a tailwind then, now they're a headwind, right? It was China's going to take over. You got to have exposure to China. That has been the worst trade of my career. China has been terrible. Now it's India that everybody's obsessed with. India's been outperforming. It's been a leader, a global leader for years already. Actually, it's several cycles now. And I don't know if these stories come to fruition over time.
Well, one is the world's largest democracy trying to actually, and now they have a pro-business. Now you can say maybe they won't always be pro-business, but China is a communist country that's not really it's just a very different ballgame of China versus India. And you listen, China's tech leaders were crushing things for a long time. Like very few things people with U.S. tech, but China tech did until like 3 years ago, where they had the common prosperity crackdown, and they started putting their own wounds, where they made some of those education stocks go to zero. They didn't let Alibaba's anti-IPO go, and that basically was like the turn. And then they started coming after these guys. a lot of people have been trying to call the bottom. You saw a lot of the hedge funds start buying China recently. I've been saying I'd still stay away. I still kind of like EMX China, or I like India, I like Japan. I'm not super bullish China at all. And even though it's a cheap market, I think they're cheap for a very good reason, and I wouldn't be rushing to it. But India, I like. I think India is a long.
Jeremy, we call out that China not going to zero trade.
I think so. A new narrative that I'm hearing, Jeremy, I don't know if you're hearing the same thing, is that China's learning through all this, all the stuff you're talking about, what happened with Alibaba and the IPO coming out. They have learned maybe over the past several years that it's bad policy to lock up your CEOs and come after your companies. Are they learning that maybe the stock market is important? Like their behavior change over time? Do they become friendlier to business? I don't know.
The question is, they try to lure you back in. They try to lure you because they need some of the capital. They've had this huge mindset shift, and there's this whole, obviously there's the tension with Taiwan, and I think about what happened with Russia, where the U.S. politicians zeroed you out. If you were a U.S. investor and you owned Russian securities, a lot of emerging market funds, my funds included, owned Russian securities, and they say you're worth zero. Now, did that help America, or that help Russia? Russia be able to buy back their companies for free, and you hurt U.S. investors. So, like, could the U.S. politicians do something crazy?
Right.
And
if we zeroed China, that would be a lot different from Russia, right?
And it's such a big thing. It's such a big weight in a lot. It's the biggest weight in all the emerging market funds. So you could say there'd be much more backlash, but you see what we did. It's kind of I'd just be more cautious. And there's a reason why they're cheap, and that tension's not going away. It's going to be with us for a number of years.
Well, we talked about yesterday sympathy selling in software. When Russia-Ukraine happened, there was sympathy selling in China because people were worried about exactly this dynamic. They saw what happened to the Russian equities. I think they started selling China. That's when you really saw there was a massive gap between the EM waiting for India and China, and that is really narrowed.
It used to be 30 versus like 12, and now it's like India is very close because of the underperformance and the outperformance.
You think that trends to like
it'll probably pass it at some point in time.
Yeah,
it's not far. It's not far now. It's definitely not far.
Well, it would definitely pass it if they get zeroed out. So
that's not a good situation.
Jeremy, what else are you seeing within your fund universe that in terms of flows or whatever, that where people are really keying in on right now?
So Japan and India have definitely been top two. We launched an interesting version of it's sort of our version of growth. Like, people know us for dividends, but QGRW is our quality growth fund. And you think about like the NASDAQ, which is just, you got to be trading the 100 largest stocks on the NASDAQ. And it doesn't actually mean it's going to own the best growth companies forever. Actually they've been dragging down. And if you compare QGRW versus the Qs or versus growth, it's only been out for 18 months, but it has a great 18-month start. We've seen about 400 million come in. It's one of our fastest funds to that level in 18 months. And it's actually had very nice performance versus those tech companies. And today we own the same top 7. Now we own 37 companies in common with the NASDAQ. The 63 that we own are much faster growing than the 63 that they have that are unique to them. We're going to be rebalancing that in a few weeks. I don't know that we're going to be selling any of the Mag 7 stocks, but I'm looking for who's the first Mag 7 to fall out, because somebody will. Right? I think Apple is the lowest scoring on our system at the moment. But we'll see, as that evolves.
Well, so how exactly are you doing this? Because performance is great, steadily outperforming any growth indexes, this QGRW. Is this growth at a reasonable price? What is quality growth? Like, explain, like Apple, aren't they not even growing top line over the past few quarters?
It's a common. So we have a few different things that we're doing. So one is, I actually describe quality as one of those early Buffett Munger factors. When you read all the Munger letters, and in Warren's tribute to Munger this year, he talked about that Charlie was the architect of Berkshire, and he got them to go finding high quality businesses, and that's some kind of high returns on capital. Now, interestingly, these tech companies are making all these big investments in R&D, and so they're ramping up spending. And the accounting today makes you expense all of these R&D investments, where if you were building a plant, you capitalize it, then you depreciate it. So we've done some, I think, interesting things on how we calculate earnings to back out these intangibles and get a better ongoing measure of profitability. But so we have like what we call this sort of, I'd say, a better look at profitability figures. But then we have, growth composite, looking at earnings growth, sales growth, EBITDA growth, that type of stuff. So you're trying to get a growth composite, high profitability, and then it's cap weighted. So it's 100 stocks, just like the NASDAQ. It's meant to compete with the NASDAQ and other growth. But
You have to cap weight it.
Yep, it's got to.
Yeah, I'm looking at, top holdings, NVIDIA, Microsoft, Apple, Alphabet, Meta, but then you get like Visa in there, MasterCard, right? Qualcomm's in there. So
do you have any opinions on NVIDIA, Jeremy?
Well, I'd done this piece when it first became the highest multiple stock in the S&P, saying, it becomes hard to outperform from these levels. Like if you look like 5 years, 3, 5, 10 years out, it was like 90% of companies that once they become the highest multiple stock don't do well.
Love that.
But it'd say once you become the highest multiple stock, it takes, on average, they outperform for the next year, which would get you to like right around now. I mean, it's a little bit, but it becomes hard. So I think they're not, now, interestingly, they're not, a lot of people make the Cisco in 2000 analogy, and even I've talked about that, but it's not there. I mean, the tech stocks in 2000 were triple digit PEs. NVIDIA is not that. And so you could go way higher.
They barely had E's back then. There was nothing in the E.
Right. So tech in general is still only half the multiple of what we had in 2000. So it's still not close. NVIDIA, it's like the only one benefiting from all this AI investment. So, and that's going to continue. It's early. Now, the question is, you start seeing like a Dell report last night, and, they make the quote from that's been going around is, they made $1.7 billion investments in servers and they didn't earn anything on it. Well, at some point, these companies have to earn a return on their investments. Right. But you're so early in that phase. So yes, is there hype around AI? Yes, maybe the hype comes off and then it continues. You got to see revenue come from all these things for them to continue to be able to make these investments. But I think you're like in inning one of where is AI going to go in terms of companies actually figuring out how to use it productively as we start the conversation. So over time we'll see, but we don't think we're in a tech 2000 moment at all.
I think, people are trying to figure out what to do with AI, how to use AI. I think market participants are trying to figure out how to value AI, right? Like a company like NVIDIA is rewriting the rules about how much you can grow at a certain size. Never seen this before. So how do you value it?
Well, it's being traded on a PE multiple. I mean, it's not an unreasonable. It's really not an unreasonable number at the moment. So it's just a matter of when do people have confidence? Is the growth going to stop? Like, are people tapped out on how many of these chips they're going to buy? But they're saying, hey, we're going to get this annually new chip, and so we're going to keep having to refresh these chips, and people are going to keep buying because there's an annual cycle. But the big companies would need to start seeing the ROI on those chips. So we shall see as it develops.
It'll be fun. It's already been fun. It's been going on for a year now. I think they're big. Their first big earnings report was May of last year.
And Steve, remember, it got cheaper, right?
It's been getting cheaper almost, after every earnings report.
Yeah.
The growth.
I don't know if you guys saw that analyst note going around this morning saying that NVIDIA gets 10% of its revenue from like 2 mystery customers, but like we all know who those are, right? I mean, like,
listen,
what are the odds Apple's not buying these chips? They need them.
Mystery customers,
right?
There's going to be some monster orders from the Mag 7.
Sure,
these NVIDIA chips, and I don't even think it came yet from Apple.
Well, Apple's trying to compete on the chips too. I mean, they're all going to try to make their own chips, So there's going to be more and more of that competition. So I don't think they're going to be the only game in town forever. There's no, when you see such margins, people are going to come after them, and that'll be the big. How many years it takes for people to actually compete will be the big question.
And also, as a very non-tech person, I can't help but wonder: like, does everybody need the best chip? Right, NVIDIA is going to make the best chip, but does it get to a point where some people say, I want to do this AI thing, and The AMD chips work for us.
Right.
Price.
There's a new one called Grok from Jonathan Ross that came out of Google's investments in TPU. So I think there's definitely going to be more competition. I think there's no question. So it's not going to be NVIDIA's going to be the only game in town forever.
Yeah. Hey, maybe you guys will have like an AI bot, like picking your funds.
We have, we do experiment. We actually have a partnership with Voya, and we have some AI value funds. I'd say they've been okay. So we've been experimenting there. I think we are pushing ourselves. As I said, I've got some Wharton interns. I've got people working on different projects. So yeah, we're definitely experimenting, and I think we have an AI fund, WTAI, that tries to be a more diversified thematic. And we're not overly concentrated in NVIDIA, so you could say the people who have done well. But we're trying to broaden it out to a broader ecosystem.
All right, Jeremy Schwartz, Wisdom Tree Chief Investment Officer, also has the great podcast Behind the Market. If you haven't checked it out, really should.
Thanks so much, Jeremy.
That was great stuff. Jeremy, thank you, man. And it's been a long time coming. Thanks a lot.
Thanks so much for having me.
All right. Yeah, that was fun, man.
Great. Yeah.
Next time we have Jeremy on, we'll get JC here because those guys can nerd out. And yeah, someone in the chat made a comment about JC not being here, missing the macro talk. JC would have loved that conversation. So
no, he does. Listen, this is fun for us because we get these different perspectives. We're not experts in this. So talk about inflation, talk about maybe the future path of interest rates, talk about how Powell did. It's nice. Listen, I get tired of the charts. A lot of charts on here. You ever get tired of too many charts? Does the chat get tired of charts? I don't know. I love charts. But there's just a lot of nice change of pace.
I wouldn't say it's hard. I would say they all, after a while, they all kind of blend together in my head, and I can't remember what any of them say because they all just.
That's why you need to spend more time thinking, like Chris Ferrone.
Now we're going full circle.
Not enough time thinking.
All right. Hey, let's talk. Let's do some earnings here. Okay. Yeah. As the market is open, and I was kind of so focused on that, I haven't even looked at what we've done in the last 9 minutes or so. Not a whole lot. Okay.
Coinbase still is just so coiled up here, man. This one, the Coinbase chart is just telling us, hey, I think Bitcoin and crypto is about to move. That's what this resilience from Coinbase is telling me. Sorry, go ahead.
That's okay. Can we bring up the Dell chart? We talked about Dell a little bit earlier, and the report was okay, but it didn't blow the doors off. And to Jeremy's point, the comments going around from the call, I think it was Tony Sacconaghi was the analyst who asked. It was like, wait a minute, you guys added $1.7 billion in, but you didn't make any money on them, right? And for these new AI servers, and so I didn't quite understand what the response to that question was, but look, it was an okay report, but it wasn't the best report. And as the price leading into it would indicate, expectations were sky high.
Yeah.
And
again, it goes back to NVIDIA is making real money off of AI, right? For now. Everybody else, or most everybody else, are just trying to make real money off of AI. Like Jeremy said, like you got to see it.
Yep.
So the pricing in, future profitability from this servers or whatever, but it's not there yet. So the stock is still cheap, though. We were talking about it with Todd Gordon yesterday. I think you want this one around 135.
All right. What else we got? We got Costco, which is
so good.
Down a little bit here this morning, right? It was kind of flattish. It's down 2%. This company just keeps trucking every single quarter. They come in and their membership is growing. They're actually doing better, it seems like, than pretty much any other retail company that we just heard from.
Yeah.
Right. And so EPS beat, sales beat. They talked about how they're going to be raising the prices of their memberships. They didn't say when, which actually occurred to me because I've been a member of Costco since I think 2017, and they've They've not raised prices one time since I've been a member, and I've taken that for granted for sure. So
I love Costco, but I'll continue to say it. I think you want the BJs. You want the BJs. BJ looks even better now. Just broke out of sweet consolidation. It is, I think, like 1/20th or 1/30th the size of Costco. I think there's going to be a lot more growth there. And I think it is the same exact business model.
well, it is the same exact business model for sure.
I'm just saying.
Yeah.
30th the size, same business model. Costco's already everywhere. Where does Costco grow to next? China? Where's Costco going next? Right? This is a mature company.
They just keep on growing. I don't know where it comes from next. They just keep on keeping on. They have like the stickiest customers on earth.
So then wouldn't BJ's too?
I've seen charts of like from like these third party data firms that are showing like store like in-store foot traffic.
Yeah.
And Costco's like everyone else is declining, right? Their month over month in-store traffic. Costco's barely budges, right?
It's a great shopping experience. I miss it. I haven't been to a Costco since I've been in Key West, and it's a damn shame. Wish we had one. But BJ's, exactly what you're saying, Christos. I agree. That's ticker symbol BJ. Can we talk about Hewlett Packard?
Sure.
Legacy Tech, HPQ.
Yeah, I don't know if we have a chart lying around, but HPQ beat by a penny. Whoop-de-doo. On the bottom line, beat on the top line as well. Guidance was in line. Nothing to write home about there.
So to me, this is
down
excitement,
6% today.
Excitement about a new PC upgrade cycle. Right. So the hardware companies should win from AI too. Think about it this way. Apple finally does something with AI, and you have some sort of like Siri AI bot who can do awesome stuff. Maybe not everybody's going to run out and get a new iPhone. I'll probably get a new iPhone though. And a lot of people will probably get a new iPhone, right? And that'll spark some sort of an upgrade cycle for an iPhone.
Maybe.
Laptops. What do you mean maybe?
No. I'm saying.
What do you mean maybe?
I was talking to myself.
Maybe you won't get one.
No, I'm just now. I'm going to look at on my phone. Like, how old is this phone? I don't even know.
If you tell me the new laptops, I could like talk to them and run stock screeners with my voice or something. I'm running out tomorrow. I'm getting a new laptop.
Yeah, I have an iPhone 12. I don't. What's that? Like 3 years old? 3 or 4 years old?
Yeah, I'm pushing 2.5, 3 years myself.
Yeah.
So look, these once you start to see actual AI tools built in to the hardware,
sure,
that's going to be a growth opportunity for these guys.
Sure.
Right. So I think that was the buzz from this HPQ report, because they're still selling laptops out here. HP Enterprises is the cloud business. That's HPE. HPQ, they're selling computers, man.
Yeah, and don't get printers and that ink, man. Got to buy that ink.
I love me a good ThinkPad. Okay.
Okay.
Can
we talk about the gap, please? I know we have the gap chart. This is now 3 quarters in a row where this company has just exceeded expectations wildly, and you can see exactly when each report happens because the chart just gaps up on them. This is happening.
Gap should be on our beat report.
Yeah, it should be for sure.
I agree. It's there.
They blew it away yesterday, and they raised their guidance. So it's up. It was up to 22% the pre-market. Don't know what it's doing now. Sorry, up 16%. So 18, whatever. I don't know what that says. So off its highs, but still huge gap up for the gap today. And like I said, this is now the 3rd time in a row they've done this. So huge.
So
retail.
Spencer is our resident teeny bopper analyst. What? You do teeny boppers, EVs, and cannabis stocks. Those are your areas. So you've been all over the Abercrombie and Fitch. Now you're all over the Gap. What other names fall into this?
VF Corp.
So is that like Tommy Hilfiger and Polo?
Yes. We have PVH earnings next week. Let's Philip Van Heusen. They're on Wednesday, I think.
PVH, isn't that Tommy Hilfiger?
Who's VF Corp? Damn it.
What is VF?
That's Vans. I think VF Corp is. God damn it! I used to know this stuff. Oh, yeah, Vans, the North Face, Timberland, Dickies, Supreme. That's VF Corp. And then PVH is PVH is Tommy Hilfiger and all those guys.
Is Supreme still trendy? People still like wait outside in the cold in New York City?
I have no idea, dude. I don't know. But yeah, I mean, teeny bopper retail does interest me because it's so bifurcated. Every quarter too. It's like there's never a quarter where they all beat and they all miss. There's always just wild swings.
Well, yeah, and I like JC's idea for this universe we're working on. We're just going to do like a giant consumer universe, and that'll be fun. It'll be brands that we all know and either love or hate. I think
Brian says Supreme is not what it used to be. Okay, take your word for
it. Fashion, right? Fashion. They're trades, not investments. These companies.
Hey, that's the truth.
The trades. I remember when everybody was wearing the goose. What is it? Those stupid jackets in New York City for like one winter. Everybody had to get one. I don't hear about the goose anymore.
All-time high, $72. Price today, $14.
Okay. It's going to happen to the Birkenstocks. You see it happen to all different shoes. I was talking to my dad yesterday. I said,
dude, Birkenstocks. That's his own thing. That's his own thing.
I don't wear Jesus slippers. This is the ugliest goddamn shoes I've
been
ever
around forever.
So stupid. So I was telling my dad yesterday, Nike's not even popular anymore. I don't know. Like, I guess they probably still dominate basketball. Nobody wears Nike anymore.
No.
Like, Nike's not cool. What happened? We used to have 4 decisions when we would go to Foot Locker. Spencer and I would go to Finish Line or Foot Locker growing up, and we could buy Nikes, we could buy Reeboks. Maybe you had some Pumas or some Filas or some weird
Adidas
stuff.
Dude.
Adidas, right?
And then when we were in like middle school, Under Armour.
Right. Okay, we had like 5 choices. Now people are using the Hokas and the golf brands, the Travis Matthews or the G4s. Like, there's just all of these little niche designer shoe brands that Nike has to compete with. This is a new world for them, right? They're not the only shoe in the store anymore.
No.
And guess what? It's kind of like it's this like trendiness culture where people want the new thing. I'm out there on the golf course. People are talking about G4s one day, then it's Travis Matthews the next day. It's some new shoe the next day. It changes very fast. So I think just fashion in general, you want to treat as a trade, as a general rule, right? Sure, there will be exceptions. There's going to be some brands that dominate for long periods of time. But if Nike can't even sustain it, I don't know who can. And you see it with Lululemon. You see it in the Under Armour chart also, right? These are all really hot at one point.
No doubt.
Not anymore. Now it's on and those weird running shoes. On chart.
Just a reminder that the Phil Knight book is probably one of the best books I've ever read about business or anything. So if you haven't checked out, God damn, what was it called? Shoe Dog. Yeah, if you haven't read Shoe Dog, I nearly cried at the end. It was a fantastic read. So free plug for Phil Knight. Hey, do we have Fonz here? Fonz, you coming on today? I think he is. I hope he is. We haven't talked to Fonz in a while. I mean, like on the show.
Corona?
Yeah, Fonz says he's ready. All right.
Come on.
Here we go.
Hey guys.
Hey, what up, man?
How's it going?
Ask you. How do you feel?
He's fine. He's fine.
I'm feeling great.
Yes. He's like JC. He wouldn't tell us even if he was sick.
So no COVID for me so far.
Great.
What do you want to talk about, buddy?
I mean, I haven't listened to you guys all this morning. I listened to Louis, you, Steve, talking about the March highs or the first quarter highs. So I think those are short-term levels we should be paying attention so far. So combined with the prior cycle highs, I bring some charts, mega cap growth.
Yeah.
above the prior cycle highs, still holding above the first quarter highs. They are looking great. They have been taking on a leadership role recently. Here's the NYSE composite failing to exceed or reclaim the March highs. So it's in a range bound zone right now.
This is so clean, Fonz. Everybody just take a good look at this chart. Do you see why we draw these silly lines on these things? Right? Like, look at this polarity in action.
That's right. And look how price was rejected right at the former all-time highs.
Yeah.
So messy for longer for me is the message right now. As you said before, there will be big winners, but also we can see some losers during this tape.
Yep. So let's talk about how can this guide us to make decisions in the market, this week, this month, this quarter. We are in a short-term range within the context of a longer-term primary uptrend. There's no structural damage. There's no damage to the primary trend at all. And you don't have to start even thinking that way until we're below these pivot lows, that green arrow. Below those pivot lows, then you can start to worry about the primary trend. You have a short-term top in place, fine. As long as we're between this 18,350 and those prior cycle highs, though, just a little short-term range probably ends up being a short-term continuation pattern and eventually resolves higher in the direction of the underlying uptrend.
That's right. So for me, above 18,000 in NYSE, or basically former all-time highs, I think we can be a little bit more aggressive on the long side. But until then, some sideways action, patience. It's the more important thing right now in the markets.
And how about the MGK, Fonz?
Sorry?
Right? Something like the MGK, you throw up.
Yeah, exactly.
You can be more aggressive in this area for now.
Yeah, I agree with that. I agree with that, and that's why the levels we're watching 291 for MGK in this example.
Very nice.
So go ahead.
I got nothing.
No, okay. I was going to say something not about what you guys were just talking about. I was just going to say something about DJT. If you consume financial media today, you are going to see headlines, if you haven't already seen them, about how DJT lost X dollars in value, was down X percent, whatever. This is why I hate those headlines.
We're not talking about Dow Transports, to be clear.
No, talking about Donald J. Trump Corporation, whatever the hell it's called.
I heard he's in jail or something. So is that?
No, he's not in jail, but he got convicted. So, but anyway, but here's the point I'm making. Okay, my prediction is that stock, which is currently down, what is it, down 6%, right? Mm-hmm. It's going to close like close to flat today. That's my prediction. Okay, like plus or minus 0.5%. Okay,
I'm surprised it's not up today.
Sure, or up, flat or up, right? It's down right now. It was down after hours and it was wildly up in the pre-market session. This headlines about stock down X% after Y event is just stupid. They're just dumb. And you should ignore them because they are talking about a half hour of price action, right? Or an hour of price action. And they're almost always dated immediately after they're published.
Listen.
And just outdated, and ignore them. So
the boys put a trade on this one. This is some really wild stuff, right? I like a good risky, but this is not even for me, right? Because you have no idea where this thing is going. I will say, as much as I hate politics, boy, our government is doing just some job at electing this man for him. Because the more that they do this and the more
we'll see.
In trouble for all these counts of fraud, his donations are just pouring in. He raised more money yesterday than any day this election cycle. So it's just, they're trying to do the opposite, but he just keeps rising in the polls as he gets in more and more trouble. And it's really like igniting the base. So I think they're accomplishing the exact opposite of what they set out to do. And to me, it's just fucking stupid. Leave them alone. Can you be president from jail? Like, how does this even work? It's
No one knows.
as an American citizen. Really,
we're gonna find out. Not, but he won't be in jail, so it doesn't matter. But Sean says they got stopped out last week. But yeah, in any case, ignore the headlines. I mean, obviously the stock is its own beast, right? But it's just stupid. That's my rant on financial media for the day. You're going to see everybody will have or already has headlines saying Donald J. Trump's stock is down after he got. Yeah, it was down, then it went up. Now it's down again. It's going to go up again. That's what happens. Like it's so. Anyway,
listen, I don't even know why we talk about this one so much. I would just ignore this. This
stupid. So that's my hot take. It's going to close flat to up today.
I'm embarrassed for our country. What a mess. And it's only going to get worse. Strap yourselves in.
Wait, you can't be bearish America and long the U.S. stock market.
I'm never bearish America. I'm bearish American politics. What a joke.
That's a separate thing. All right, let's do some recess and get out of here.
What do you got? I got no recess.
I got something. I got a movie recommendation. It was okay. It was like an okay movie. If you you know what it was? It was a good airplane movie. I didn't watch it on an airplane, but it would have been a good airplane movie. And that it's called The Hummingbird Project. It's on Hulu. It's not based on a true story, but it could have been. It's about two guys that were trying to build a fiber optic network from the Kansas Stock Exchange to Jersey City and the New York Stock Exchange, so they can shave a few fractions of a second off their transaction time. And
so they're just saying it's not a true story, Spencer. This is a true story.
Well,
I mean, true as hell. I was there.
It happened, right? If you read Flash Boys, it happened. Yes. This movie is not like it was probably inspired by that, but like the events of this movie didn't happen the way it was depicted, right? Like it's a dramatized version of that.
Where is it on? What's this on? I love it.
It's on Hulu. It stars Jesse Eisenberg.
Perfect
one of
for
the
these movies. He's the best.
One of the Skarsgård. I can't keep the Skarsgård straight, but and then Salma Hayek plays like a Wall Street like investment firm boss lady. So kind of fun. But it was all right. It was all right.
Fun fact: back in 2012, I was 2 years into my professional career, still at my first job out of college. I was an auditor at Deloitte. I was tasked with auditing. What they do is they take the balance sheet and they take the income statement and they'll put your initials. Just like Fonz, we have our projects and I put your initials. This one's for you. You're responsible for this one. They put your initials on the line item. Like, hey, Andrew, you're auditing cash. Steve, you're auditing accounts receivables. You know what I got? You know what they gave me, Spencer? Fiber optic cables. I got the intangible assets line. And we were all like, how the hell do we even do this? No clue what to even do or what to even think about it.
That's good.
So that was fun.
Yeah.
Flash Boys had just come out.
So anyway, that's what I got. That's my recess. Fonz, you got anything?
Yeah, well, my recess, we spent a great time in California last week. Sonoma was incredible.
Favorite part?
Favorite part, I have two favorite parts. When we drove through the mountains and we get to Napa, that was a very, very
that was great. Fonz and Mary and myself drove through the mountains on like Tuesday morning just to get breakfast. Crazy
incredible view. It was a good drive. And the other one that it was the same day. Like the village we went to eat and drink wine.
Sonoma Square.
No. The village.
The winery?
Vineyard.
Yeah, exactly. Yeah.
The caviar and champagne.
Exactly, that one. I love that moment. And of course, seeing all the team. I think it was the first time the entire team was in one same place, so that was incredibly cool.
Yeah, we had
Yep.
all of us. You know, sometimes like last year at the Future Proof or some conferences, Fonz has, you know, been with me a couple times at different conferences. Like we'll have Pat there and Fonz will be there, and like Louis was at Future Proof, but we had the whole team, the whole analyst team, the whole extended team, like the whole family was out there. It felt like a family reunion.
Great.
Didn't it feel like a family reunion at times?
Yeah, it was good.
All right, it's Friday, which means we've got our latest episode of Off the Charts coming out at noon. The guys, meaning
Who is
Steve and Sean, spoke to
Who is
Jason Purrs.
Ooh, the Purrs. Shout out Jason.
So that video is going to go live on the channel at noon. Also available as a podcast. Check your podcast platforms: Apple, Spotify. Are there any others? I don't even know. But Off the Charts, Jason Purrs, noon Eastern today, right here on the channel.
And this is
thanks to our guest today.
This is an extra good episode, Spencer. Like Jason's just such an interesting guy with just like such a rich background of different unique experiences, and we really dove in. So I think everybody will enjoy that conversation.
Nice.
Yeah. Thanks to our guest today, Jeremy Schwartz. Thanks to Louis. Thanks to Fonz. Thanks to all of you for hanging out. We'll be back on Monday. You guys want to know who the guests are next week? I'll give you a quick teaser. Then we got to hop. Next week, we'll have... Oh, Brian Shannon is on the show. I actually forgot about that. We'll have Brian Shannon. We'll have Larry Thompson. We'll have Brian Lund. We'll have Scott Brown. So good lineup next week. We'll see you there. Go make some money, all right?
Have a good weekend, everybody.
Bye, guys.
I can't take no loss. I don't even know what it